Hey everyone, Meta Platforms reported fourth quarter and 2023 earnings results that sent the stock price soaring nearly 20% after the results were announced. So what were in these earnings results that sent the stock price up so much? That's what I'll review in this video. I'll also update my recommendation of a Meta Platform stock. Remember, coming into this quarterly report, I had recommended Meta Platforms as one of my top stocks to buy in 2024. So if you had followed that, your investment would be up considerably as of this point. So I'm going to let you know if it's time to sell and take profits, or do we let it ride here with Meta Platforms. So let's take a look at these earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, Meta stock price increased since the company reported earnings. In fact, Meta Platform stock is up considerably since reaching the lows around $140 per share in late 2022, and now it's up to $484 per share. Of course, if you have been with my channel since I launched in late 2022, I've been recommending Meta Platforms since then. Meta Platforms was on my list of top stocks to buy in 2023. And it's again on my list for top stocks to buy in 2024. So I have been recommending Meta Platform stock all throughout this rise here from 2023 and now on to 2024. But is it going to remain on that list after this recent surge? Let's take a look at the results. So in one of the biggest understatements in financial history, Mark Zuckerberg says, "We had a good quarter as our community and business continue to grow." Yes, a good quarter to be sure. Revenue increased by 25% to 40 billion in the most recent quarter, up from 32 billion in the same quarter the prior year. Facebook or Meta Platforms achieved this while also cutting costs by 8%, down to 23.7 billion from 25.7 billion. That led to income from operations to increase by 156% to 16.38 billion, up from 6.4 billion. And now you can understand why I said this was an understatement here. Phenomenal results here from Meta Platforms to be able to generate this kind of increase in revenue, all while still cutting cost, makes it that much more impressive. Many companies are able to grow sales at the expense of profitability because they spend more money on sales and marketing, they hire more people, they sell their products at lower prices just so that they can generate sales. That wasn't the case here for Meta Platforms. This was organic sales growth and significant profit increase. And that's why this share price increase was justified. There's a reason behind it. The company earned this performance increase. And one of the more important metrics to follow if you're looking at Meta Platforms is the family daily active people. These are how many people are using Meta Platforms' various apps, including Facebook, Instagram, WhatsApp, and Messenger. That increased to 3.19 billion as of December 2023. That was an increase of 8%. So despite its massive scale, already near 3 billion, it's still growing this number by hundreds of millions of people year over year. So this is really good news for Meta Platforms investors, and another reason why the stock price increase was justified. Additionally, ad impressions and price per ad in the fourth quarter of 2023, ad impressions delivered across the family of apps increased by 21% year over year, and the average price per ad increased by 2% year over year. Double growth prospects here, really good again. Increasing your supply by 21% and at the same time increasing the price by 2% is really good. Remember, from the law of economics, when supply goes up, price goes down usually. That wasn't the case here for Meta Platforms, signaling that this increase in ad impressions was likely due to people spending more time on Meta Platforms and more people on Meta platforms. So a combination of more people and people spending more time allows Meta platforms to show more ads and thereby do it without decreasing the price per ad and without decreasing the quality of the experience on Meta's apps. Because of course, Meta can increase the number of ads it shows you when you're on the platform. But if it does it too much, then that would make the experience not so attractive for people who are using the app. And you would see evidence of that with a decrease in family daily active people instead of an increase. If people are still logging on every day, 8% more year over year, that indicates that the experience is still attractive for people using the Meta Platforms app. Some big news came from its capital allocation programs. The company repurchased $6.32 billion in stock and $20 billion in stock for the fourth quarter and for 2023. Management signaling that they felt their stock was undervalued as well. Still, they think it's undervalued even now, and they announced a $50 billion increase in the share buyback program. They're making available another $50 billion to buy back their shares. I mentioned already they did some cost cutting. Headcount was 67,300 as of December 31st, a 22% decrease year over year. They did a meaningful cut here, and I think they did a better job in their headcount reduction, their cost cutting plans than Alphabet. I've been a little bit critical about Alphabet's cost cutting plan in that they spent too much money on severance. They were too generous in their severance packages compared to how many people they let go. They didn't reduce their headcount as much as Meta Platforms reduced their headcount, although they spent, if not similar, more on restructuring and severance compared to Meta platform. So I wasn't too thrilled with Alphabet, although I still like Alphabet stock. I have it rated as my top stock to buy. I just thought Meta did a better job in their cost cutting than Alphabet did. And the bigger news came from a dividend initiation. Meta Platforms declaring a cash dividend of 50 cents per share. Now, this is interesting because one of the reasons why Meta Platform stock had crashed so much on that chart that I showed you was Mark Zuckerberg's ambitious investments in the virtual reality segment in becoming a metaverse company. And investors got a little bit scared about his free spending ways in capital expenditure. By declaring a dividend here and increasing that share buyback to 50 billion, I think it sends a signal from Mark Zuckerberg that he understands investors were a little bit concerned about him having all this cash in his discretion and investors wanting him to return some of that cash back to shareholders so that he has less cash available to spend in the metaverse investment, because investors are still not convinced that those investments in the metaverse are going to pay off. They're still a little bit skeptical about that, right? Because that's not what the company that's not the core competency of Meta Platforms. They want Meta Platforms to focus on its core competencies, which is operating the social media networks and generating advertising revenue. So this was a double good news again for investors in that it's a dividend, right? That's solid. It's not a massive dividend, 50 cents per share per quarter, $2 per year, a small dividend, but it could grow over time, and it sends a signal from management that they're going to be more thoughtful about capital allocation and about deploying shareholder money. So to update my recommendation of Meta Platform stock, I'm keeping it on my top stocks to buy list. Yes, the stock price is up significantly, but so is the company's revenue, cash flow, profitability, daily active user count. The business has improved, so you're getting more for your money as an investor. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.